whole dollar currency war perspective that I take, where it's almost like a game of rock, paper, scissors, but I also equate it to an algebraic equation of A times B equals C, where you've got your the dollar and fiat currencies representing one of those factors, gold and hard currency representing another, and then Bitcoin and crypto/digital currency representing the third.
You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. You are listening to the Financial Survival Network. I'm your host, Kerry Lutz. Hey, Eric Hadik is with us now. You find him at InsideTrackTrading.com. That's INSIIDE, tracktrading.com. So, Eric, as far as precious metals go, we've been seeing some activity there, record high gold prices, but not so much for silver.
I think that gold and silver, particularly gold at this time, has reached a new plateau where it will probably spend some time throughout the last 6 months. My work had been ever since it turned positive in October of last year. It was projecting a surge up into the April-May timeframe, with the potential for a final spike high in July. I'm still treating that as a possibility, although I've had one or two indicators start to turn negative on gold for the 1 to 2 month outlook. So I am looking at more of a consolidation phase up here. When gold and silver surged into April and right into that April 19th timeframe that I think we even talked about in some past discussions, gold had reached its 3 to 6 month upside targets right around the 2440, 2450 level. And then when we had that pullback into early May and a new surge where silver reached some of its 3 to 6 month upside targets around $32, with gold only retesting its highs, you began to get a little bit of that divergence at the highs, with one of the markets making a significantly higher high, the other just making a double top. And then, as I alluded to a minute ago, gold turned a weekly trend indicator that I follow closely, turned that down. That's a bit of a lagging and confirming indicator, but it just reinforced to me that gold had probably set a 3 to 4 month top back in April, retested it in May. And as I said before, it could see a retest of it in July. But most of the other technicals are just showing me that it needs some time before it can see a new advance. And with that said, I do think there's going to be more upside out over the 6 to 12 month time frame. I think there are a lot of factors, some that aren't even on traders' radars, that are positive for gold and silver, and probably will continue to be so for the foreseeable future.
All right, so intermediate high, and like the same for silver?
Yes, I do. Silver, by reaching that $32 level, a little bit above 32 is where some of the targets I had came into play. It fulfilled a multi-month upside targets. And usually when a market has had a couple of surges like that, it needs some time to just establish a comfort zone up at that new plateau, and also await some ascending, upward sloping averages to start to catch up with the markets. Anytime you get a market going too far away from that moving equilibrium, it usually wants to come back to it. And sometimes that's just by trading sideways and waiting for the averages to catch up. Sometimes it's by declining enough to meet that rising average. But that's one of the things that I think you're needing to see in gold and silver at this time.
Okay, so the tree does not grow to the sky, and it needs time to consolidate, and that's kind of the natural course of events. So, what about Bitcoin? That hit new all-time record highs. Now it's hovering in the mid 60s to low 70s. Same situation there.
A little bit different in Bitcoin. I've often talked about the whole dollar currency war perspective that I take, where it's almost like a game of rock, paper, scissors, but I also equate it to an algebraic equation of A times B equals C, where you've got your the dollar and fiat currencies representing one of those factors, gold and hard currency representing another, and then Bitcoin and crypto/digital currency representing the third. And usually you'll only get one of those three moving significantly at any point in time, and the other two are usually staying in more of a trading range. When Bitcoin finally came into a peak in the first half of March, that kind of allowed gold to accelerate to the upside. So even though they were both showing strength against the dollar, they do it in different stages, and it's almost like one or the other is attracting a lot of the speculative interest from anti-dollar traders. When Bitcoin rallied into mid-March, it fulfilled a lot of 3 to 6 month cycles that I was watching. I had kind of laid out a scenario last year where I thought we would see an overall surge into late February, early March of 2024, and then Bitcoin would have to mark some time, see some corrections, but the longer term outlook was still for higher highs in 2025. And I think that's where Bitcoin has been now for a few months, is trading at or below that mid-March peak. And I expect that peak to continue to hold for the coming months. So it wouldn't surprise me to see some additional sell-off in this time period over the next couple months as Bitcoin and cryptos, just kind of similar to gold and silver in that respect, as they set a new plateau and develop some comfort levels up at those higher levels.
Okay, and so let's talk about the dollar, since you brought it up. Hit its all-time peak back in, I guess it was October, well, not all-time, but the recent peak, October of 22 at 113. Now it's been trading, still trading pretty robustly, 106, 105 right today as we talk on June 24th. It's trading at 105.5. I think the last time we spoke, you were thinking it would be declining at some point.
I am looking at the dollar primarily from a longer-term perspective, and I do think that late 2022 peak was a major top in the dollar, and there's many factors that go into that in my thinking, but stepping back to the broadest perspective, I've often discussed what I call the 40-year cycle of currency war. And I trace it back for hundreds of years in America and even many more hundreds of years in Europe. And the conclusion that I had from that overall cycle is that you will usually see finales, big, significant, culminating moves at the leading into transition of that cycle. And I was looking at 2021, 2022 as being the transition, kind of entering into a new 40-year cycle. And so from that perspective, the dollar was already looking like its bull market, which really started in 2008, was coming to a close. It had traced out a very classic textbook 5-wave advance from that 2008 low. I published many of my upside targets surrounding 110 to 113 at the time, and I think you just mentioned the dollar peaked at 113. And there were a lot of corroborating factors that went into that analysis that the dollar was setting a multi-year high, and that I think from a fundamental perspective, the handwriting was already on the wall, that when you looked through the previous decade, through the 2010s, that you saw a slowly developing but gaining momentum move for a lot of other large trading nations attempting to move away from the dollar, attempting to combat the dollar supremacy and hegemony throughout the world. And that just fits so perfectly with this ongoing 40-year cycle of currency war that the dollar's supremacy was coming to a close, coming to a culmination. And it doesn't mean that suddenly the dollar is going to be replaced on the world stage as a primary reserve currency. But when you factor in all of the debt of the U.S. and who holds that debt and what goes into the dollar valuation, it wouldn't take that significant of a shift in the global reserve currency hierarchy to really wreak havoc on the dollar, on the U.S. economy, on interest rates. And I think that's what we're looking at in the coming years. And you just kind of keep hearing more and more events, communiques, intonations that are moving in that direction. It was last year when the BRICS, Brazil, Russia, India, China, and South Africa, that monetary union, when they invited another 6 nations to join, and several of them Middle East oil-producing nations. And that is moving towards a greater union. And one of their primary things is combating dollar supremacy and starting to do more international trade in other currency. But even just in the last week or two, you had some information coming out of Saudi Arabia talking about the rethinking the whole dollar oil connection that had been in place since 1973-74. That's really what has propped up the dollar for this past 50 years. And now there's more and more talk of starting to adjust that as well. And like I said, it doesn't mean that suddenly the dollar's going to dry up and disappear. That's often the conflicting feedback that I get. Well, how can you say the dollar's, not going to be? I never said that. All I'm saying is that its unmitigated supremacy is going to be challenged and likely reduced, and that reduction will have serious ramifications as a result.
All right. Yeah, well, I guess that's been coming for a long time, and we shouldn't be too surprised by it, should we? So, kind of a
Yeah, and I didn't really, I guess I stuck on the big broad perspective there just to follow up with that and answer the rest of your question. I think that the dollar index saw an initial sharp sell-off into July of last year, and you can count that as the first wave or a large A wave and a giant ABC correction, whatever you want to term it from like an Elliott wave perspective. But when you see a big sell-off like that after a market has been in a bull market for so long, then you often get a very extended and trading range bound market in its B wave or two wave, kind of the reaction back towards the upside. And I think that's what the dollar has been in for a year now, that it's more of congestion. And as I was mentioning with Bitcoin and gold, they're adjusting to a higher plateau. I think the dollar is setting a secondary lower plateau from where it peaked, and that when the time is right, you'll start to see another wave of selling and something that starts to break more significant support levels and starts to catch the attention of more and more of the masses. And then you get that sudden rushing for the exits type of thing from a speculative standpoint, where it's like, oh, wait a minute, we just broke, multi-year support. There's something going on here. Oh, look, there's been this move for 10 years now to start to unseat the dollar. And why wasn't I paying attention to this type of reaction?
Mm-hmm. Yeah. All right. Hey, so interest rates somehow fit in with all this, don't they?
Yes, they do. And I think that they are going to go through a lot of kind of a tug of war, a lot of push and pull, where right now I don't think that discussion of the dollar is a big factor in interest rates. I will often reiterate to my readers what I call my axiom of market correlation. And basically what it says, what it attempts to illustrate, is that when you have two markets that are typically correlated, first off, you need to know which is leading the other at any point in time, because they often will alternate leadership. But second, it's usually when the leading market, whichever that is in a very defined, often accelerated trend, that correlation kicks in. And so what I mean by that is if you had dollar struggles suddenly prompting the need for interest rates to stay stable or higher to try and attract value into the dollar, that would only be the case, would only be a strong correlation if the dollar was really in a significant accelerated downtrend. And conversely, if you're looking at interest rates, if interest rates are leading the way, which they've been more the leader over the last few years, and when you have higher interest rates attracting or supporting the dollar, as they did up until that late 2022 peak, you had the anticipation of higher rates. And then once that starts to peak or summit and starts to level off, then you get other factors, independent factors of those two correlated markets, exerting a stronger influence. So right now, I think that interest rates have their own supporting or influencing factors, and they have been showing that after the long decline in bonds that we saw from 2020 into 2023, conversely, the long upward move in interest rates, that they need a decent amount of time, probably a year or two, of more trading range bound markets up and down as we get the competing inflation numbers and economic numbers before you'll see a significant move in interest rates either direction.
Okay, reasonable. So what about oil, energy? What are we looking at there?
I have been looking at oil from the perspective of some fairly significant cycles I have converging in the middle half of July. And my thinking all along has been that would more likely be a multi-month low in crude. When we had the sell-off of the last month or two, I had two primary downside targets for crude. One was right around $73, and then the other was down at $69 to $70. Crude plunged right to that $73 one, and then has been rebounding ever since. There's a couple of indicators I'm watching that are going to be really critical on the weekly close this week on June 28th. And as long as they stay the way they're at right now, crude would still maintain the potential to head back and retest its lows, maybe spike a little lower in that middle July timeframe. But from there, I think crude does have, assuming it follows that scenario, I do think that crude has some future upside potential from there. But again, it's at a very critical point in an overall cycle, in an overall trend, where I really need to see it validate the remaining part of that analysis for the continuing scenario to play out. Otherwise, I may have to say, okay, this part of the outlook was wrong, and it skews the outlook for crude for the next 3 to 6 months. But right now, I think that we could see a pretty significant low in July, assuming we get another sell-off here in the coming weeks.
Right. Okay, so interesting. So any other markets you think we should be paying attention to right now, Eric?
At this point, I think they're really some of the primary leading markets. I don't know that anything else really stands out at me right now, so I'd say that's a pretty good synopsis of the big factors in the market.
Right. Yeah, well, certainly they're the ones that we pay attention to every day, every week, and every month, and certainly they're the most important ones. By some reckoning, although you could debate whether metals are that big a deal right now. Do you think that focus like on precious metals, once they surpass this intermediate plateau, do you think there will be more attention to the sector?
I think so, and it's a little bit like what I was describing about market correlations and if and when the dollar breaks some key support. I think that as gold and silver continue to break upside resistance levels, or in the case of gold setting new highs, that I think that will generate more and more attention. And it's funny to me that when you go back to that October 2022 timeframe, which was also the peak in the dollar index, as you said, but was also a multi-year cycle low in gold and silver. They had very consistent 7-year lows in 2015, 2008, 2001, and 2022 was the next phase of that cycle. But you had the cycles and a lot of indicators saying, okay, we should be entering a multi-year uptrend in gold and silver. And then a few months into it, and then a year into it, you start to hear and see the data on particularly China and household buying of gold, and that really underpinning that it wasn't just a reactionary speculation thing. It was a prolonged investment perspective. And at the same time, you have the dollar starting to get chipped away at by other nations, and you have interest rates peaking, which was helping to support the dollar, and you had inflation growing even more. It's kind of this perfect storm for continuing to support gold and silver out until my next multi-year cycle high, which comes into play in 2026. So I do think that there is going to be more attention steadily focused on that as it climbs this wall of worry or whatever it may be that is prompting gold and silver to head to new highs. I even have some work in platinum and palladium that are showing they should be setting some interim bottoms here, and that they could see some decent moves up into the first part of next year. So it could be a combination of factors that continue to support metals and start to draw more attention to them.
All right. And finally, one other question. The impact of the present election or its participation in these cycles, are you seeing any particular impact from it?
It's funny because I've been, over the last couple of months, doing a lot of additional research on longer-term cycles in American elections and the shift in party control. And I'm actually putting together an article on that in my upcoming July Inside Track newsletter. But I do think that it's going to have a significant impact on a lot of these markets. And there are future cycles in stock indexes and markets like the dollar that I think are all kind of corroborating that outlook, that scenario. So yes, I do think that the election is going to play a key role in a lot of these markets.
All right. Well, we're going to leave it at that. So you want to go over to Inside Track Trading. That's INSIIDE tracktrading.com and check out Eric's work. If you've got a question for Eric or myself, please shoot me an email, kl@kerrylutz.com. You'll find a link to Eric's site in the show notes to this interview on financialsurvivalnetwork.com. Please, when you're there, sign up for your free newsletter. Eric, it's always a pleasure, and we will talk to you again soon and get your latest.
Sounds great, Kerry. Thanks for having me.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.